Okay, before we head into that break, I just want to quickly get in Phani Sekhar with his opinion on the markets as well, particularly this rally in PSU banks. Phani, great to have you on the show. Thanks very much for taking out the time. Take it away. What do you make of Bank of Baroda, SBI, Punjab National, the PSU rally in the session today? Banks, essentially.
It was long overdue. However, I'm not convinced. Fundamentals are far from improving. And the only positive here is the front-loading of the infusion of capital into these public sector banks. Otherwise, if you look at the timeline, it's broadly the same from 2012 to 2014.
Well, no one knew it would be 25,000 crore in FY17. No one knew that it would be another 10,000 crore in FY18. Let's be real. I mean, there's a number in place now.
So if you actually look at what has been happening in terms of capital infusion for the last 4 years, it's been close to 10,000 crores every year. Right. And if you actually look at that number of 25,000 or 30,000 crores over the next 4 years, it's broadly in that range. I think the only element of surprise there is the front-loading part of it, where the government actually talks about infusing 10 to 15,000 crores in this financial year, or maybe 20,000 crores this year. If that happens, that's a mild positive, but it's not going to improve the fundamentals in a big way. It's a big relief. But since these banks were extremely oversold, I can understand where the rally is coming from. Any fresh investment from these levels, I think, might be a tad dangerous.
What about the attempt to fix the board?
Let them fix it, then we'll be convinced. It's not easy, as we all know, because there is a long tradition of how things happen. And it's difficult to see. Actually, this debate has been going on for the last 1.5 years. We are yet to see what kind of talent actually comes into PSU banks. If they can fix the board,
he is now board of executive, non-executive chairman, BOB.
That's a good beginning. But you would appreciate that they tried. I think there were positions for almost 10 public sector banks, and they could fix, I think, 1 or 2.
3 or 4.
So the thinking in the right direction, taking the steps in the right direction, but it will take its own time. But more importantly, we are not really here trying to invest into public sector banks on what they would do over the last 5 years, but what they had done over the last 10 years in terms of the poor asset quality and how that can be addressed. And that is something that I'm not really convinced at this point in time. Only viable solution to that, or a long-term solution, is improvement in economy, which will in turn make a lot of those stressed assets standard. I think that's the solution there.
No, so this rally that we're seeing in the market right now, you're just saying that this is a technical bounce because the stocks were oversold? Because even in terms of numbers, BOB has pretty much delivered. Punjab National Bank, it seems like at least for this particular quarter, they were able to come around and arrest the problem of asset quality. SBI, there was some concern on the top line, but largely numbers were again in line with estimates. For the larger PSU banks, this rally doesn't reflect that, the change of guard would mean work in progress, which is important.
Work in progress is important, and as I said, hence it's a relief rally. But when you invest for the next 2 to 3 years, are we sure at this point in time that this is the last, or at least we are somewhere near the bottom of the asset quality? I was, for example, a little concerned when I saw private sector banks show pretty sticky gross NPA ratios. Now that's not a very good sign when you're talking about the asset quality cycle actually bottoming out. So I would like to hold my horses, wait for a couple of quarters and see where it goes.
Okay. Stay on with us, Phani. We'll head into a short break right now with lots more to chat about, which we'll do on the other side of this break. If we take that break, hear out some more key market opinion on where the markets are headed near term and what you could bet on in terms of sector investments.
The increased volatility in other markets such as India will actually provide opportunities for long-term investors to pick and choose solid themes. So you don't trade at times like this. You figure out when the volatility favors you in terms of a crack. You trade out when volatility pulls up something that you don't really want to own. And I think a little more juggling and realigning of portfolios will be called for now. The large dollops of work which are happening in IT are still traditional IT, and that transition is likely to be well managed by most Indian IT firms. So you look at a company like Mindtree, which has got a very high proportion of, let's say, digital revenues in its revenue mix. And what this tells you is that there's a whole lot of Indian IT companies out there who are not going to be left behind in the innovation curve. And it's not that there is going to be a step function down and suddenly business is going to vanish for these guys. I refuse to believe that. I think this is a time to place faith in what has been said will be done, and because even what has been said is completely revolutionary. You're now getting people from the private sector to head PSU banks, this is something unthinkable even in that last take on banks that we published. We said that public sector banks are a strict no-no, but the day something structural changes, they'll be the best buys on the street, and that's exactly what's happened.
We are bullish on this space, be it seeds, be it pesticides. We are fairly bullish, and as we go into the space of, as more companies come into the space of warehousing, of food procurement and food, that also is an exciting space. Fertilizer costs, your petrol and diesel costs have fallen. Also, the wage growth has moderated significantly as rural incomes have slowed. So, to that extent, there is some savings on cost side as well. So, to an extent, the farmers are able to improve their yields, and the farmers are able to grow more. Their profitability is not going to be hurt to that extent.
All right, welcome back. For the moment, it's 31 points for the Nifty. It's 158 points off for the Sensex. Nothing special about markets. The Bank Nifty is looking okay. That's about it. But if I take today's price action aside, I think somewhere the real star sector has been the IT index. The IT index in this series, which is the August series, it has appreciated by about 4%, approximately 4%. Today, IT stocks may be taking it easy. That really could be profit booking. In general, it's turning out to be a very decent, constructive, and encouraging month of August for IT companies. And TCS, by the way, is not very far behind from a record high which it touched. I think the record high was closer to 2800, but it's going there. That's the IT index for you. 3.5% up for the IT index this month. Is it rupee?
Mostly yes.
That's it?
No, not that's it. Mostly rupee, which shows the renewed interest over the last 2 weeks. But generally, IT has been pretty resilient. And the simple reason for that is, look at where the demand is. The end user markets have all been reviving. Now, you saw fairly stable US data. Actually, Germany and France had been pretty resilient, although you had seen problems in Europe. So, for example, you have both the DAX and the CAC, which are up by close to 20% on a year-on-year basis, whereas you see larger problems in the euro area. So, in a way, the end user markets have been strong enough for IT to do well. More importantly, since the shift largely to the digital phase, and many IT companies were actually prepared, and that also explains why Indian IT is experiencing strong demand. And rupee has been an icing on the cake. So actually currency over the last 1 year has given you almost 7% advantage vis-a-vis the dollar. So that's not a small number when you compare volume growth that is less than 10%. Combine these two, you are looking at about 15 to 16% top line growth.
But 15 to 16%, a lot of critics have said it's not a great number. A, why? Because that means that IT business is not growing. The pie is contracting because of base effect, because of size. B, none of the Q1 numbers inspire a great deal of confidence. With the exception of Infosys, there was no wow factor.
That's true. Let me address the top line number. If you actually look at the global IT spend, it's close to 3%. So we are no longer, I agree with you, we're no longer growing by 25 to 30%. So somewhere the pie would stabilize, but still I would argue that the pie is growing because we are growing our volume at close to
9 we are growing 10%. Because of IBM and Accenture, we're gaining market share.
Absolutely. And that's something that will continue to happen for a few more years. As far as the first quarter numbers are concerned, I agree with you. The numbers were not exactly great. But considering the overall context of relatively lesser choices for investors to invest, and when you juxtapose that with the predictability that you see over the next 4 quarters, I think IT is something that investors are still comfortable with. First quarter traditionally has been weak for most IT companies because of a variety of reasons, pay hikes and visa costs, etc. But generally one is confident that over a 1 year basis, over the rest of the year, IT companies would return you around 15% growth in profits. And when you look at the valuations are anywhere between 14 to 17 times, depending on which company, apart from TCS, at least among the large caps. So that's not very expensive.
Yeah, just want to, while we're having this discussion, just want to mark some news on the screen. This was perhaps in the works for a while now. Some bidders keen to buy out company stake in Reliance Infratel. We were the first to inform you on that. I think Nisha broke the story. Got indicative bids for Reliance Infratel stake. They aren't putting a number to what the stake sale is, but I think our channel checks, as Nisha's story had highlighted, was talking about a number of 20,000 crores, which would pretty much cover, the kind of debt problem that Reliance Communications has. Phani, just comment on this because the stock has reacted. It's 4% up. And I think this one would be perhaps game-changing and would give Reliance Communications enough ammunition to first arrest their debt problem, kind of cut down on their debt, and secondly, face the upcoming competition with the 4G rollout.
That's right. Without getting into a specific buy or hold advice on this, one must appreciate that a large part of the enterprise value of Reliance Communications is debt, and equity is a very small part. So any such deal which tackles debt will have a huge effect on the residual equity. I would not be surprised if the stock sees a much better rally from here, although that doesn't constitute a long-term buy or hold advice.
Fair enough, but do you think that, given the fall the stock has seen on account of just being an over-leveraged company, that, something like this, a development like this could make the stock attractive at the current levels vis-a-vis its peers, Bharti or an idea?
Well, there are two aspects to this. In the first phase, you will cut down on debt and you will get breathing space. But ultimately, valuations in the long term are always a function of what kind of growth and more importantly, in an ever-changing industry like telecom, how comfortably you're positioned. And to my mind, I think Reliance Communication is not any longer the front runner. Okay. And with the impending competition coming from Reliance Jio, I think the challenge will be that much more higher for Reliance Communication. So I would like to look at this piece of news as some kind of a opportunity for a relief rally in Reliance Communication. What they do with opportunities going further is something that only future will tell.
They have surplus spectrum, perhaps the only telecom company which does not need spectrum because the market share is not growing. Spectrum can be traded officially. So there are two bonanzas for Reliance Capital. Number one, debt reduction because of stake sale in the tower business, trading of spectrum. If Reliance becomes an asset-light company because of debt, can that change the fortunes? I know the debt is huge, about $6 billion, $6.5 billion. I could be off by about $1 billion here or there.
If they are successfully able to trade their spectrum, then it opens up a new vista of opportunity because they can always carve a niche for themselves in their chosen area of expertise. Having said that, the key there is what they can do with that excess spectrum, and more importantly, in which part of or in which circle this excess spectrum is and what price it fetches, because an excess spectrum in a C circle is very different from that in a metro, and I believe Reliance Communication is pretty strong in B and C circles.
Yeah, B and C they're very strong. Yeah, but they have excess spectrum that can be ruled out. 255, let's get you trading ideas. Ashwini, any 255 trading idea?
See, I think while Can Bank and BOB has worked, Bank of India is also showing lots of strength. So that's a buy with a stop of 180, target of 205. I'm buying post the news and post this rally because this could be beginning of a rally on PSU banks. So still not too late to get in.
Okay, Mitesh, your strategy at 255?
Yeah. I would suggest a buy on stock which is buzzing on Friday, that's Adani Ports. After a big breakout on Friday, I think typically, stocks after giving this kind of 1 day, 2 day breakout do go through a period of quiet activity when it's good, if you get an intraday dip of about 1.5%, good to accumulate. So I think Adani Port is doing that kind of movement. Good to buy with a stop below 346.5, and I would look at targets of 380 to begin with, 395, 400 on the positional side.
Okay, funny comment on that aspect. At Adani Port has been a key performer. In today's session, it's of course down about 1.5%. But as I was discussing the earnings season gone by, Nikunj highlighted one point about asset-light companies. The other thing is about asset owners, and especially in the infrastructure space, those companies have stood out. So whether it's a Tata Power for that matter, or an Adani Port or an Adani Power, do you think that there will be interest continuing in that pocket, especially for the asset owners?
Yes, disclosure being we hold this company in our PMS portfolios. Well, it's nice to be an asset owner, but what is critical is you should be an asset owner in an industry that's performing. So ports is one of those few sub-segments of the infra space that is relatively performing well compared to maybe roads or a power. It's the worst time to be an asset owner in the power industry, for instance. So that way, Adani Ports is in a sweet spot. Because as economy improves and trade grows, which it is bound to, then I think the fortunes of this company will only increase.
Well, what did you make of Tata Power's numbers? Because the stock had reacted positively to that, if you track that stock.
Again, a big relief. They have effected a major turnaround in the kind of numbers that they have reported. Although I have not scrutinized it very closely, but I believe that it marks some kind of a game-changing phase for them, and one only hopes that things get better from them.
Well, the lead in BOB is still intact, and if I look at what is happening to the rest of the market, the breadth is definitely better than what we've seen and what we've reported in a long time. But in terms of the market breadth, from the days low, the market breadth has become better. HDFC Bank has been firm like a rock. It's marching towards a record high. We've just forgotten this stock. Yeah, we haven't discussed it in a while. It moves 7, 8, 10 rupees, and in a week it moves to 40 rupees, and you say, oh my God, how did we miss this one?
Probably because it's not as exciting as maybe some other mid-cap private sector bank or even a PSU bank.
At relative value. But this one is delivered despite that.
When you have public sector banks that are rallying by 20%, I don't really blame you when you miss out on HDFC Bank, because it is expected to be a market performer. Again, as a portfolio manager, my vote goes towards private sector banks like HDFC. Disclosure being we hold this in our
So tell me more about your portfolio. What are your top holdings? What are you buying for the long haul? What are you buying only for next year or so, where you're just playing, where you just have a tactical call?
Well, we do mandate-based investing, so there is no model portfolio. But generally, as a house, we are very positive on large private sector banks, auto, FMCG, pharma, and IT. Broadly, the 5 large sectors, which constitutes a pretty diversified basket.
But that's 90% of the market cap.
That's right. So we are right now favoring more of large caps over mid caps, because if you look at the data, you had 35% rally in mid caps in the last 1 year. Large caps only went up by 11 to 12%. Many instances we are struggling to find value in mid caps and small caps. Because we believe all the quality mid caps have run ahead of themselves by at least 1.5 to 2 years. So for the time being, we are more comfortable investing in large caps compared to mid caps. This is both a strategic call, but something which is derived out of what we see in the market. We are simply not finding enough candidates in the mid and small cap space to put our money to work.
Your large private bank portfolios plus ICICI Bank or minus?
It includes ICICI Bank, because I don't see anything concerning there to really have a meaningful underweight position.
But why is ICICI Bank behaving like a PSU bank?
You said it quite.
I think the year-to-date return for ICICI Bank is negative. Let's look it up.
Yeah.
It's more than 10% for sure. I'm just jogging my memory here, so I'm going to wait for the suspense to get over.
This year performance is it? I mean, by a margin, it's an underperformer to what the other private banks have done. That's 14% down. Why is it behaving like a PSU bank?
Well, your guess is as good as mine. Having said that, you keep talking about individual accounts from time to time that have a bearing on a large number of banks, with ICICI Bank being prominent. However, I'm on a larger point. When you invest from a 3-year perspective, I'm more comfortable investing in an ICICI Bank compared to a public sector bank, both from an embedded value perspective as well as the valuation of the core banking franchise, because this is one of the larger banks that is still logging in around 14% return on equity and is available at sensible valuations. On the other hand, you have public sector banks which are valuable, but at the same time the return on equity is yet to touch double digits, and maybe it will take them another 2 years with the help of fresh capital infusion and maybe better advances to really get into a return on equity of 14 to 15%, which is required in order to be better than your cost of equity. So basic economics, I think ICICI Bank is still a much better bet than PSU banks.
Sun TV has gone to its 200 DMA. Let's get into technical experts. Again, markets, they love to hate Sun TV simply because of uncertainty. But Sun TV has made a remarkable comeback. There is a lot of smart money which is buying into Sun TV of late. That's ICICI Bank. We'll go to Sun TV in just a bit. Mitesh, come in on Sun TV. Another decent day, 364.
Sunday was recommendation on Friday and today morning as well. I think it's completed a good pullback which was there for about 8-9 days, bounced back from its 20-day average. I think it's resuming some kind of an up move. It could head towards 390 is what I think I'm looking at as the final price target on the upside.
What do you make of the story here, Phani? 4% is today's gain, but I think what Nikunj is trying to highlight is what the stock has done over the last 1 month. I mean, with the earnings, with the legal overhang easing a bit, it's not completely off the table. Sun TV has definitely rewarded investors, so much so that now and they have that, the kind of value add that you would get with regional exposure and, the advertising muscle that they can garner in terms of ad revenue growth from that market. So what's the call on this one?
Completely news-based. So you could actually get up one day, read a newspaper about what have been the legal proceedings in their case and take a call on the stock. From a longer term value investors point of view, I agree with your point and that the odds of Sun TV getting into a structural problem in the longer term is low. But having said that, in the medium term, as news flow keeps coming in, this stock will keep oscillating and you haven't seen the last of the volatility out here. So from a longer term value investors point of view, there might be an argument in favor of investing. But from a short to medium term investor, I think you should be ready for volatility.
Okay, now I also want to mark Karvy Seeds. Looks like that stock has really lost the bottom. It has fallen on very, very strong volumes today, and volumes, they really run into millions here. Now the promoters have been offloading their stake in the company because they want to start they want to venture into a food business. The existing shareholders have said Karvy Seed is a seed company, dare not venture into the food business. So promoters are selling or reducing their stake in their company, in Karvy Seeds, and that really has not gone down very, very well with institutional shareholders. Ashwini, suddenly Karvy Seeds has lost its mojo. It was one of those haloed stocks about a year ago, but now it's running towards the bottom.
See, if promoters are selling, then what is left in a company? So I don't think you need to be buying it if you can get out, because it's really the bottom is falling out. So there's really nothing you can talk about in terms of levels. But if you do need some sort of theoretical target, that could be closer to 300. What's interesting is that the PSU Bank Index is getting past its 200-day moving average in more than a year. It's almost a year's high, which is significant action on any index. So chances are this PSU rally at least should have another 10 to 15%, because once we cross the 200-day moving average, you should see more strength coming into these stocks.
Okay, that's a quick word in on PSU banks, and that pocket in the market has really rewarded shareholders. They have been trying to break ground, especially some of the larger PSU banks, ever since the earnings came out. So for a PNB, Punjab National Bank, I clearly remember post earnings, there's a big move. I don't know if that gets reflected in the 2-month chart or the 1-month chart for Bank of Baroda. But it's been a decent show for these two names, particularly within out of the 3 biggies from the PSU lot. Sandeep Agle joins in with his assessment of the market too. And Sandeep, what's your call on stocks this afternoon? What are your top strategies?
Tanvir, I would talk of the Nifty being range bound. I don't have a very clear view. I don't see 8550 being broken. I don't see 8400 being broken. So nearer 8400, I think there will be buying opportunities. Nearer 8550, there will be selling opportunities. Stock specific, I would go with a buy in a JSW Steel, stop loss of 940, target of 1005. and a sell in the ONGC, stop loss 268, target 253.
In our industries, now keep this one in focus because one of their subsidiaries is going public very soon. Historically, we've seen that every time a subsidiary of a listed entity it goes up, mathematically the entity of the mathematical valuation of the holding company changes. We've seen that in Biocon. The minute Syngene IPO was announced, Biocon rallied. We've seen that sometimes these demerger stories have really played out very well. Another classic case here is what happened to Marico after Marico Kaya was separated. What happened to Alembic after Alembic Limited, which is the real estate arm of the firm that got listed. Are you a big fan of paying these holding companies? Because now we would be staring at a barrage of IPOs. It's Pinar Industries, then I think ICA goes public. So the list of some of these subsidiaries going public will be a very warm story.
Well, it all depends on what is the nature of the holding company. As long as holding companies are operating companies, I think it's a good idea to look at them, and they have created a lot of wealth for investors. But in many cases, you also see that holding companies had erstwhile glory, and they are no longer meaningfully operating companies. That is where I think you should be a bit careful. But as long as you have healthy operating companies demerge a part of their business into a new entity, I think it will create wonderful growth.
So Biocon and Syngene, Syngene listing has been beyond expectations. Let's be real here. I'm not a big fan of their CRO business, but mathematically it has changed the Biocon valuations.
Absolutely. Because Biocon is a perfectly healthy operating company, and when you see Syngene, which comes out of it and which surprises everyone, even the biggest of the bulls on that stock, you can actually see the kind of effect that it had on Biocon. So I would look forward to such instances where you have operating holding companies that give rise to newer companies.
Nikunj was talking about analyzing Tata Motors long-term chart. Are we lower on the currency? Just 1 second, Phani. We are looking at further weakness on the currency. That's a 0.5% fall. We could bring up the weekly performance of the 7-day chart for the currency. From a move of 63.50 to 65.30 has come quite swiftly, and that's a 2.5% loss that we've seen in the currency in a matter of just the last 7 days. Before that, actually, the currency didn't do much at all for the better part of this year. From a year-to-date perspective, it was flat, max negative about 1.5%. But now that gets stretched out to almost a 3.5% decline. Is that a key worry in market circles as well? Are you discussing a lot about what's happening with the currency in lieu of what's happening in the rest of the region with the yuan devaluation?
Not really. I think the currency might be up for a little bit more devaluation. If you actually see, relatively, Indian currency has been an outperformer, especially compared to the US dollar.
Yeah.
If you look at currencies like Australia, Malaysian ringgit, or Indonesian rupiah, yen, or a euro, I think they have depreciated much more than the Indian currency. So to that extent, I think the primary focus of the central bank would be to maintain competitiveness. And with oil at 49, I think they have a much better elbow room to let the currency depreciate a little bit more without stoking inflation.
Does that mean risk off from oil and marketing companies, book profits there, because they benefit because of a low oil price, but then currency pretty much mitigates that advantage?
That might be an inevitable trade-off because currency has to, I think, depreciate a little bit more. Also consider the fact that if interest rates go down, as we all widely expect in India, that also will have an impact of depreciating of the local currency. On top of it, if you have US Fed, unlikely, but if it increases rates, that also can lead to depreciation of Indian currency. So all in all, I think odds of depreciating currency in the near to medium term are higher.
Axis CADS 306, 1 million shares. That's a big number. So this one is moving up, and it is moving up on very solid volumes. Cipla is cracking, and it is cracking again on strong volumes. Now the typical part here is that today selling in Cipla is coming on back of strong volumes. Today the uptick in Axis CADS is coming on very strong volumes. Ashwini, let's talk about both these stocks. Cipla down 40 rupees, 7.8 million shares. Axis CADS Engineering 305 to 1.2 million shares.
See, Cipla basically has had a fairly large rally from about 550. So good results, huge bar. This bar is basically a 50 rupee bar. So chances are that more downside could come in. It could be only a correction, 620, 650, that zone. But definitely today's, good news has led to several people booking in terms of booking profits. As far as Axis CADS is concerned, it's kind of a sideways stock. Today has broken out. I think once we get past 390, you could easily see probably levels of 550. So today is the day to buy Axis CADS if somebody wants to do that.
Okay, just want to mark the update in the Sahara case. Thanks, Ashni, for that quick perspective. We'll get a fundamental view on supply as well in just a bit. But as far as the Sahara case goes, alert 2 companies had pleaded court for buying 3 Sahara offshore properties. I don't think that deal has seen the light of day. The Sahara Group has told the Supreme Court, the Apex Court that is, that they're not selling the hotel at the moment, so not really monetizing on their current assets. However, proposals are still streaming in for some of their key properties, and they are under review, they are under consideration. That's a quick update as far as the Sahara case goes. But coming back to the markets, and Phani, I was asking you about why this big sell-off in Cipla. The numbers looked good. Do you think that this is just profit-taking, given that the stock has been an outperformer within the pharma pack? Or do you think that the fundamental changes that the market has not met its eyes with?
Well, I don't know if these are fundamental changes that the market has started acknowledging, but it's easy to conclude that because of the relative outperformance of both Sun and Dr. Reddy's, and with the sharp run-up in Cipla that one saw over the last 3 to 4 months, it is natural for some profit taking to happen there. But why 5% and why today is something that I have no clue.
I didn't find too much fault with the numbers. I mean, Nexium is working for them. It is not a very expensive stock. However, there's a fault line with Sun Pharma. FY16 will be a washout here. The core thesis that Sun Pharma will grow at 20% plus irrespective of whatever could go wrong in the world, that thesis has got challenged. But at 800, closer to 900, is all the bad news in Sun Pharma?
I think close to 800, all the bad news was in Sun Pharma. 800 to 900 is again, I guess this 12 to 13% rally is based on a lot of expectation on FY17. And to that extent, I see that 900, 925 might be some kind of a ceiling for Sun Pharma in the short to medium term.
Okay, let's talk about the 2 key highlights in today's session. We've spoken about PSU banks, and we'll talk about the internals there because it's important to assess the kind of volumes which are a key indicator technically on where the stock moves. So, the volume picture would perhaps give a better sense of whether this PSU bank rally is sustainable or not. Pranay will throw more perspective on that. But before we go across to Pranay, I just want to mark OMCs because brokerages, especially Barclays, have come out with their extensive report on the entire pack. Ajay, what are they saying? It's a divided house?
Well, actually, that will be a much better way to put it, Tanveer, because while Barclays says that, that the consensus rating will get upgraded, etc., they maintain overweight. CLSA has come out and said that, see, the oil marketing companies were running in the last couple of weeks mainly because the refining margins were expected to be extremely strong. But now with the results of all the 3 companies being over, what is coming out is that yes, the GRMs have been strong, but large part of the massive profits have also come in from inventory gains. And that's also one thing which CLSA is highlighting. Not only that, BPCL in particular is witnessing selling. One that we are gathering from our sources that all the 3 OMCs are witnessing selling from domestics, especially one of the largest one, which also has a private sector bank. So they have been big sellers. And the data is already showing that the quarter ended June, most funds have trimmed exposure. So now the upstream end of the BPCL's business is also coming under pressure with crude oil prices falling. So all these combination of factors is leading to good delivery based selling in the oil marketing pack.
Well, Pranay, it could be a PSU banks. They are a completely and totally different kettle of fish. Today there is fun and excitement in that space. But what are brokerages in general indicating and communicating to their clients?
Well, Nikunj, yes, actually all the PSU banking futures are gaining in trade, and the biggest gains are being tracked by Bank of Baroda, followed by Canara Bank, PNB, IDBI Bank, many others. Brokerages are mostly positive about Indradhanush or the 7-point reform agenda that has been announced. But basically what they're saying is that this is a repackaging of the earlier proposals that have been made. So though this is a step in the right direction, the key over here is the execution quality, which will determine the improvement in the performance. And most of the brokerages continue to prefer banks with the high tier 1 capital, where the deposit franchise is pretty strong, that is CASA, and the asset quality is manageable, that the ship can be turned. So naturally, SBI remains the top pick for brokerages such as CLSA. Bank of Baroda too is being recommended as a buy. From the infra NBFCs, they like REC as well as PFC because of the valuation attractiveness and also 18% plus ROE, good dividend yield. When it comes to Bank of Baroda in particular, Morgan Stanley is very bullish. They've actually raised their stance on this counter by 2 notches to overweight, so that's a double upgrade coming in from underweight stance earlier with a target price of 240. The reason why they have this bullish stance is because this is the only large PSU bank which will have a private MD and CEO as well as a chairman coming in, and both of these have very long tenure. So for example, P. Jayakumar, who's been an ex-Citi banker, has decades of experience in setting up the retail banking as well as other product lines for Citi across Asia. And the other one, Mr. Venkateshan, has been on the board of Infosys, has also steered many other large companies. So clearly they have very good experience and they could enjoy long tenures, as a result of which this bank amongst many other PSU banks could actually raise capital, according to Morgan Stanley, at a better multiple than other PSU peers, which means they could position it as a quasi-private bank. And its current valuations at 0.9 times 1 year forward is looking rather attractive with those kind of assumptions. So yes, you are seeing very high volume buying that we are seeing across all the PSU banks, and all the futures are trading with very good gains today.
Yes, indeed. And I was just looking at your volume data as well, Pranay. Fairly startling with the kind of build-up that we're seeing in open interest this afternoon. Thanks very much, Ajay and Pranay, for running us through those highlights and trends in the market today. Let's get in closing strategies. Last 10 minutes of trade left. Ashwini and Mitesh are still with us. Ashwini, come to you. What is it that you'd recommend in the dying minutes of trade?
Well, Can Fin Homes, since all PSU financials are doing well, and that's a stock which has completed a correction, so that's a buy with a stop of 800. Try to look for targets of 850.
Okay, Can Fin Homes is a recommendation. Mitesh, what about you? What is it that you'd recommend?
So in the last 1 hour or so, I think Oil India has picked up some steam. So it's given a buy signal on the intraday chart. So as a PTSD, I would suggest this trade with a stop at about 457, and would look at targets of around 473 for tomorrow.
Well, DLF, it was mighty excited, supercharged, charged up on Friday. Honestly, nobody was expecting a 20% rally on DLF post what happened on Friday. But 3% off, approximately 3.5% is what DLF has lost today. Ashwini, today's price action in DLF, is that healthy? Is that base formation?
See, chances are that DLF may consolidate here and then have another big move, because 3% after a 17-18% move is nothing, and people should get ready for, if PSU banks can rally, next in line should be realty stocks, maybe some reform etc. comes in here, because something is getting anticipated in these moves. Otherwise there is no reason for realty stocks to move up the way they are moving. So definitely try to buy this reaction on DLF, and yes, Friday's low is a fairly decent stop. I don't think that will get violated.
Well, State Bank of India is at 279, but the one which I want to mark is actually Ashok Leyland, and it's just been a relentless one-way street for Ashok Leyland, irrespective of the environment. It's a 2-digit stock, irrespective of how risk is moving, how mid-cap stocks have moved. Ashok Leyland is sitting at 92 rupees. Extraordinary, isn't it? It could be 100 rupee stock soon. But my question is, does it deserve to be 100 rupee stock?
Not very long ago, it was 12 rupees.
Yeah.
That was about, I think, 18 or... 18
no, that was, I'll tell you the date also. It was December 2014.
That's right. So,
Really?
again...
15. Yeah, December 2015. December 2013.
Okay, let's just bring the
That's
chart up.
December 2013.
No, but you're right about that. December 2013 to now, it's been a
15 rupees, I remember
move for
checking
Ashok
15
Leyland.
rupees.
Let's bring up that timeline for...
And after that they came on and they reported one of the fattest loss in the history.
that represented the bottom of the domestic CV cycle. And with one expecting major improvements in infrastructure, I guess Ashok Leyland, which has a rich portfolio in the heavy commercial vehicle space, is likely to do well. But having said that, I think this already discounts FY18 numbers. But since Tata Motors is not a relevant play on domestic CV cycle, I can understand why investors are flocking to Ashok Leyland.
So there's a bit of a scarcity premium as well as we look at the chart, Nikunj, which is highlighting from December 2013.
No, you know that the guy who really got quick into it in December 2013 was Akash Prakash of Amansa. He ended up owning about 1% of the equity. Let's actually look at the shareholding pattern. You know, sometimes I get very fascinated with how the smart money moves. There you go. Our viewers will have to just bear with me. I'm using my software just to look at it. There you go. According to the Bloomberg data, Amansa Capital owns about 1.7% stake still in Ashok Leyland, and bulk of the purchasing was done in December 2013.
Yep.
That's why he's such a great fund manager. Even Phani is a great fund manager because he's also identified some great stocks in the past. One of the stocks which you've always liked, and this we've in the past, was Reliance Industries. You've been on and off on that one. Is it time to buy into a commodity stock when the cycle is not with you?
Not really. Well, and that is something that is reflected in the weight of Reliance Industries. 3 years back, it was 10% of index. Now it is 5%. I think it is not a great time to be going whole hog on Reliance Industries. As an institutional fund manager, you might be compelled to have some weight allocated to Reliance Industries. Or if you are keen not to underperform the market, you can still have that market weight of 4-5%. But even if you don't include Reliance Industries in your core portfolio at this point in time, I don't think there is anything great to lose because there are exciting opportunities in about 4 to 5 core sectors, and oil and gas, or to that extent.
Does the same hold true for ONGC also? Just stay away for now because the stock has not done too much.
That's right. With oil falling every day, I don't think it's great to own ONGC. And by the way, if oil exceeds $60, I am not sure how much positive it is for ONGC as per the new government formula. So it's better to stay off it.
Yeah, it's one of those stocks where oil goes up, subsidy burden goes up. Oil comes down, realization comes down. So I don't know how to judge that stock, honestly. I mean, I have no idea.
For a Navratna PSU, you know, where it's a profit-making PSU, it's done well in the past. It's just, you know, the dynamics, the policy dynamics are weighing the stock down.
Traditionally, an oil exploration company will suffer if oil prices are not with you, if oil cycle is against you. But then when oil cycle is with you, that time you have the subsidy issue. That time you force them to give discount to oil marketing stocks. And ONGC is actually what? The 52-week high is closer to 450. It's at sub 300 rupees. It should be somewhere
roughly
there.
Around that.
Roughly should. What a disaster. What a disaster.
So just avoid ONGC and Reliance Industries from the portfolio because they're not going to give you much on the table.
Right now, yes.
Okay. I don't know, but did you answer that question about Ashok Leyland? Do you think that if somebody was to invest in Ashok Leyland at these levels, have they missed the bus?
I think
because many viewers out there, after seeing that chart that Nikunj highlighted, right they would have been like, wow, did we miss the boat?
No, to be very honest.
They missed the truck in this case.
Literally, yeah.
Well, in my previous role, we had got into Ashok Leyland in a big way at 21 rupees. Having said that, I think it's a bit too late to get into Ashok Leyland because, as I said, it includes FY18 estimates and very bullish ones.
Okay, one stock Ashwini has been consistently highlighting from the morning is JSW Steel. And Ashwini Gujral, 9%, great call. How should one read into today's bar in JSW Steel? Bottom formation or just a one-day wonder?
Well, definitely, metal stocks are looking for a pullback rally. And, its 200-day moving average is around 980. So heading into fairly significant resistance. So I would be tempted to take half my profits off and then see what happens because it's had a fairly sharp rally right from 800 to about 980. So right now it's time to take money off. But it appears that in case there's a metal rally that happens, and there will be pullback rallies, this is likely to outperform. Maybe even 1050 is possible if China stabilizes and stops devaluing.
Okay, good going for JSW Steel, and we'll get in just a final round of where Phani has his high conviction ideas in the market. But I just want to quickly wind down the market. You have 84.50 coming in on the Nifty. It's a flat close optically, but there's a lot that's happened in intraday trade. Fair amount of volatility, attempted pullbacks, but the market has finally closed in the red. Mid cap and the small cap indices marginally in the green, so not too much to write home about there. But a lot of individual pockets gaining traction. The biggest among those is really PSU banks. 15% move for Bank of Baroda, SBI, Punjab National Bank, close to 4% higher. Tata Steel, and this one has also been a bit of an outlier really in the commodities basket ever since its earnings, 4.5% up. I think the 7-day chart would reflect some more traction for Tata Steel. GAIL, NMDC, Idea Cellular, these are stocks which have held out in the session. The number of gainers are few, but the concentration of the gains is extended out, which is why you're seeing this sort of even-steven balance on the index. The number of losers the list of the losers is longer. Starting off with some marquee index heavyweights, ONGC, Reliance continue to underperform rather. You have a Dr. Reddy's and M&M, which have been pain points for the market. Bharti Airtel is closing about 1% lower. Oil and marketing companies, BPCL included, on the index itself, down about 1%. Cipla, and the numbers looked good, but there could be some intrinsic factors given that the stock had run up ahead of earnings that could lead to a sell of news sort of situation on this one. Hindalco also down about 2.5%. Z Entertainment down 2.5% as well in the session. Very quickly to run you through some of the key gainers in the broader markets, and you have Aramco Industries, which has gained traction, and then of course you have some of the mid-tier PSU names, Canara Bank, Bank of India, IDBI Bank, all of them traction. OBC also closing higher. It's a day for PSU banks, and the PSU bank index, that's why on a cumulative basis has closed 5% higher. Amara Raja Batteries gains about 9%, so there's some traction seen there. JSW Steel, as we just marked, 8% solid, strong move coming in for that stock. ICRA also moving up by about 5%. Remember, within the ratings business, CRISIL, ICRA, CARE, this one has been an outperformer, so 5% up, and has, I think, returned about 20% from a year-to-date perspective. Then you have KPIT, Cummins, First Source, which have done well. So mid-tier IT has also pitched in. On the losing side, it's broadly the infrastructure basket. IL&FS Engineering, Jyoti Structures, Punj Lloyd, Amtech Auto, those are some of the names. Simplex Infra losing ground, Gammon Infra as well, but that's a small stock.
Not bad, honestly, not bad, considering that after a 500 point Sensex rally on Friday, we've seen a bit of a fall-up selling, but even though Friday's institutional data was not all that strong, it was not all that supportive, it's not been a complete washout or a complete disaster session. The breadth perfectly even, Steven, which is the point I want to highlight. For last week, the breadth was really fractured. The breadth was very fragile, but today the market breadth is looking much better. Crude continues to decline, so that will be a talking point going forward as well. There you go. I like this graph. More green, less red. Advances also. Even Steven, if I look at the total breadth, the F&O breadth was not that impressive. 63 advances, 95 declines, but that's a function of that day's price action. But net breadth today was not really the low point whatsoever. Okay, Phani, we don't know how long the PSU banking party or the rally will last. Once this entire hot air effect is over, which is one PSU bank you would like to buy?
Well, more than one. I would like to look at all the top PSU banks. So that will have starting State Bank of India, Punjab National Bank, Canara Bank, Union Bank. At least these are 4 names that one can bet for a longer term perspective. But you're right, the hot air has to be first out.
So minus PSU banks, minus RIL, minus ONGC, minus Ashok Leyland. What else would you recommend in your portfolio?
Well, that just explains how challenging a fund manager's job is.
Surely enough.
Nothing is easy. I mean, there are no free lunches, let's be real. Television anchoring is also not easy.
I admit. So it is the large private sector banks, IT, FMCG. Market has a mixed view on FMCG, but I think you are getting good opportunities there. At least
Nestle is a good opportunity before we let you go.
Yeah, it does look like.
Another marquee stock which has fallen by about 15-17% is Motherson Sumi. They missed their numbers by just a whisker, and the stock's down 15-17%. Good time to buy into a Motherson Sumi.
Disclosure: we hold this in our portfolios.
Are you buying now?
I see both of you thinking quite alike.
Excepting PSU banks, where we both have a different view.
Yeah, that's true. Where I'm more aligned to your view, by the way. Okay, but we'll leave it at that. So Motherson Sumi looking attractive at these levels, and also Nestle. Thanks very much, Phani, for joining us with your perspective in the markets and your individual ideas as well. We'll take a... no, actually, before that break, I need to quickly get in closing thoughts from both Ashwini and Mitesh. Ashwini,